Ni hao ba. Right. Morning, everybody. Welcome to Forex.Today. Today is a Thursday, otherwise Thorsday. Did you know that? The word Thursday is a Viking word. Thorn is anvil. Thursday. Yeah. Anyways, what that means to me is weekly jobless claims. So anyways, let me remind you that trading is risky. Not appropriate for everyone. Beautiful banana. Your trading history, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Believe it or not, many years ago I used to tell people to trade on a demo account until they had a track record of success before trading real money. I got slapped by the government. I'm like, what are you talking about? They're like, you can't say that. What do you mean you can't? You don't want me to tell amateur traders to practice on a demo account and not trade real money until they've and they're like, that's past performance. And you have to tell them the opposite. Past performance is not indicative of future results. You can be successful in a demo account and lose money in the real world. So don't tell people to trade on a demo. I was flabbergasted. You got to be kidding me. But anyway, so hey, past performance is not indicative of future results. So the other way of looking at that is you can be successful and then lose a whole bunch of money. And that is true. Yeah, that's great. Great. Well, you know, lots of people have tested that, right? Lose all your money and then trade on a demo. Yeah, that's been tried too by lots of people. So anyways, yeah. Yeah. You're going to burst my gaster, man. It's only so much flabber to go around. So, yeah, it's a true story. In fact, so I did a video. It was actually a TV commercial. It had to do with a webinar that I was doing. I promoted it on Bloomberg and CNBC. It was actually a pretty cool experiment. Something about Forex, Fibonacci's and stuff. It was really nice. But at the end, it said, don't, you know, practice on a demo account before whatever. And so you have to submit that to the NFA first to get them approved. And they're like, there's no way in hell you can say that. I'm like, I'm asking people to trade on a demo account. You can't say that. I mean, but we already made the video. We recorded it. You can't use that. You have to change. So yeah, so I went back to the agency, because literally it was a professionally produced with voiceovers and stuff. You know, it takes money to lose money. So anyway, so send it back. We had to redo it and not tell people to trade on a demo account. I'm like, hey, great. Look, all right, it's only another $6,000 to go back and change the last 10 seconds. All right, last 3 seconds. Cost $2 a second. Because you had to get the voiceover redone and everything. Like, so you had to rehire the same voice actor. You had to come back to the studio. I mean, you're like, what? So anyways, just, you know, the fun things I've learned over the years. So you could be a hero yesterday, but you could be a zero today. And you should always remember that, and that is absolutely true. And usually you blow up your account after a good run, because your good run is luck. I know it's luck because you blew up your trade account the next day. Hey, Ryan, I don't think the admin cared that much. It's the advertiser, huh? So why do they say that? Michael says, well, you put it this way. Let's say you have a good trading day, good trading day, good trading day, gamble everything. That's what all regulatory agencies are hoping you don't do, or even worse, they don't want someone else. I mean, I guess at the end of the day, you could do it, right? But let's say I'm advertising a get-rich-quick scheme, and I'm like, yeah, use this method. It works, it works, it works. Boom, right? And they're like, look, you can't tell people stuff like that. And I agree, it's true. The London Daybreak Strategy, right? Yeah. So, it must be very difficult being a regulator, because sometimes it seems very counterintuitive to me. So it must be very difficult for them. So anyways, I don't have any beef. It's just history. My name is Wayne McDonell, by the way. I'm the Chief FX Market Strategist for TradersWay.com, a lovely boutique trading firm that would like to be your prime broker for your successful trading business. And our strategy to take over the world is to treat you with respect, provide you with support and resources, not trade against you, enter your trades in the interbanking system very, very quickly, and charge very competitive fees. Wow, that's actually pretty smart. That actually sounds intelligent. Yeah, you're like, no one's ever tried this before. You realize this? You're like, oh my God, that actually makes sense. Yeah, do you mean to be an honest broker? Oh, it'll take forever to make money that way. Hang on. Hey, it's a lifestyle. All right. So anyways, hey, so we love you. We want to take care of you and all that kind of stuff so that you can do what you want to do and do it well. I do these sessions 7:30 in the morning, in the a.m., a couple hours before New York opens. It's approximately London lunch. Good opportunity for us as a community of traders gathering here at Forex.Today to align our satellites. Remember, I don't think I've ever told you to do something. Hey, buy this, sell this, let's go, 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 trade, trade, trade. You don't get that from me. So we're a community, and we're trying to figure things out and plan things out technically, fundamentally, psychologically, emotionally, chemically, physically, all kinds of stuff. We talked about Ryan yesterday. Who should we pick on today? Noki, huh? Well, let's start with peso. This is nice. Czar. What's that? What is it? I think I've heard of it. Yeah, it's only Rand. I will remember that till the day I die. Ah, it's only Rand. Been in South Africa for a half an hour. There's locals checking into a hotel, and he's like, God, it's only Rand, and they start laughing. Like, no joke. One guy's on the phone, the other guy's checking into the hotel. The guy gets the bill, or checking out of the hotel, must have been. He gets his bill, and he shows to his buddy, and he's like, ah, it's only Rand, and they laugh. Like, okay. Ah, it's only Rand. South Africa's awesome if you're from somewhere else, right? South Africa's awesome if you're not from South Africa. Yeah, great place, right? Johannesburg's beautiful, right? Go to a nice restaurant. Sommelier brings out a bottle of wine. Yeah, that's going to be like $9, maybe $12 US. You're like, $12? Yeah. So, South Africa, wonderful place. Gotta go. Yeah, no, no, yeah, I'll have fun. That's where you get the stupid big dog tourists, right? You gotta hate them. I hate tourists buying 5 bottles of wine. You know, and that's the cool thing about South Africa, though. The wine is fantastic. The steak is world class. The people are awesome. The culture's great. The cities are beautiful. But be careful. Someone's going to stab you in the back and take your wallet, and it's probably the mayor or the governor or the president. But everybody else is great. Yeah. Oh my God, you're going to. Yeah. So, anyways, no, South Africa is honestly a beautiful place, just incredible in many, many ways. It's a frustrating place because of it, because you want so much more for it. Right? I mean, right? You want so much better for it. So that's why it's frustrating. No, but you know, like, India's, I guess, kind of a similar way. I mean, there's much better infrastructure in South Africa than India. But India, you're like, you get there and it's like crazy and chaos and it's just a very difficult place to be when you're in India. And you're going to places, and you're like, this is so hard. And then you get home, you're like, oh, I miss India so much. I can't wait to get back. And South Africa is almost kind of different. Like, you're there and it's great. But then you get back and you're like, it deserves better. It should be better. It should be easier. It should be. It can be, you know. Well, getting through India. Wherever you go in India, like if you're going somewhere, once you get there, it's great. So I don't know. So anyways, I guess we need to move on to .com. So I was going to do some support and resistance here. Okay. And so we got this range going on. But again, I want to point out the timing issue. Okay. I think it's right in here. In this time period, the only thing we wanted to do was sell. And our first part of the plan is to get down to obvious support. We never know where it's going, and I'm always clear about this. We don't know how far it's going to fall. How strong will the peso be after the repatriation trade? How weak will the dollar be? Blah, 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 blah. You don't have answers to that. I don't have answers to that. This is, somewhere in between a scalp and a swing, isn't it? But we know two things that are clear. when, and what direction. Ryan, I hope you make a phenomenal amount of money, because I think you're a person that could handle it, like in gross amounts, just gross amounts, and you use it well and wisely and kindly, and maybe have a very positive impact on your country. I think you're capable of it. Yeah, I think you should be president. That'll be fine. I'd vote for you. Yeah, I've lost my mouse. Are you guys still around? All right. I got my mouse back. All right. Yeah. We all have to have goals. I sat down with my wife and kids about 4 days ago, and I said, I have a new goal in life. I want to win the Nobel Peace Prize. It's a true story. And I have a plan. I'm putting a plan together. I'm actually going to try. I probably won't. I will have to work really hard, probably spend some time and money, probably take me the rest of my life. But we all have to have a hobby. Yeah. I'm not going to share how. That's up to me. But I have a plan. All right. But Forex funds these things. I guess that's where I was trying to get to. Right? Once you get the money and you got a fancy watch and a fast car and a big house and a boat, and you're like, I'll never buy a boat again, so you get rid of that. And then you're like, well, now I got enough. I got more than enough. Now what am I going to do? Because just you have a skill now. It's not like Forex goes away. It's not like one day you run out of gold and you need a new gold mine, right? No, you can now have a skill. So at some point, you'll get past all this frivolous, crap that clutters our mind. But you need to pay the bills. You need to live in a safe neighborhood. You got to provide for your kids. I mean, these are really serious issues. But what do you do after that? You know what I mean? Do you understand? Like, what do you do then? Well, I need a more expensive watch. I need a faster car. My Gallardo doesn't cut it. I need an Aventador. Then you get a bigger house. Then you go to your neighbor and he's got 5 Aventadors. You're like, oh, dang it. Well, I need a private jet, right? And you're like, no. I mean, some people do this endlessly. But I have a feeling you're different, right? All of us. So what do you do when you have enough? You get back in your own way, right? And I think you can have fun. I think you can spend your money in fun ways. So let's just get you there. That's my first goal, right? Yeah, buy more cows. Okay, so anyways, you can make the world a better place. This is just going to finance your projects, right? All right. So that's why you need a skill. You don't want a trading what do you call it? Like a trick, because those things only work for so long, they change. But if I can teach you how to develop patience and discipline, then it's like ongoing, right? Right? Like the carry trade stuff. I've only been doing that like 15 years. There's nothing to say that will continue for another 15 years. right? So what are you going to do? So you better have a skill. These divots, no, they aren't. So you better have a skill is all I'm saying, right? Well, you know the thing about Goldman Sachs is that, you know, a lot of people say a lot of evil things about them, and they'll do things like, well, look at all the guys in government that used to work for Goldman Sachs. They're in on it. It's like an Illuminati. They take advantage of the people and stuff. But I've heard it's the other way around, where you're being interviewed for a job there, not like a peon job, but let's say, you know, a management role or higher. They sit down and they look at you and they're like, all right, you're 30. You're going to be a manager here. You're going to become very, 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 very wealthy working for us. How are you going to give back when you retire 10 or 15 years from now? It's a serious question. Like, all right, so we're going to help you make a few $100 million personally. How are you going to give back? And for a lot of these guys, they're like, well, you know, I'll work in the government. But anyways, I'm not trying to convince you one way or the other. All right. But it just scares me when you do that, because some people are like, we need less finance people from Harvard. I'm like, wait, I'm a finance guy from Harvard, and I'm okay. Yeah, I'm sorry, Hadir. My bad. I'm just jacked up on coffee, not enough sleep. Okay. Okay, just kind of reinforcing what we've seen here. Okay. This goes back how many days here? 1, 2, 3, 4. Cool. So going back to Monday, I think what we said was you can buy it here or you can buy it here. That's what we said on Monday, right? Cool. Hasn't quite worked out, but it's not worked out. Now, what if you were a bear? What if you thought the opposite? Well, then your job was to sell here, 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 or here, correct? And I think this is extremely important as a lesson, because we acknowledged this big move last week. We created a trade plan based on pulling back, you know, all that kind of stuff. We identified 2 levels of support, and we've been waiting. And if you were the opposite, if you were a bear and you just felt like we've gone far enough, and weekly M3 for the swing trading guys, okay? Okay? Is their sell. So here's the takeaway. If you were a bull and bought at support, or if you were a bear and sold at resistance, you potentially could have made money. Now maybe you got knocked out on pullbacks on breakouts because you expected a bigger move, but these are 4-hour candles, right? But you could have made money. Like, I can't even see this. What is this, 34? 60 and a half move is, I mean, even the half moves here are 100 pips. The full range is closer to 200 pips. So if all you did in life was sell at resistance or bought at support and there was no breakout, you made money. That's the message though, right? Were there any other levels of resistance I identified besides the weekly M3 up here, which was also the double top? Was there any other one? No. Only identified one. But I was a bull. I only pointed that out. If you were a bear, that's where you would sell. And there was no other place to sell. Right? I mean, that's right. There's only one place to sell. People sold it 4 times. Very predictable. Very, very predictable. Well, you're working on predicting the future, aren't you? Remember, I said, well, that's all you have to do is predict the future. That's all you have to do. Wouldn't it be easier as a trader if you could predict the future? Well, that's what we do. That's what people pay you for. What do you do? What's it going to be like in 6 months, 1 year, 2 years, 5 years? Oh, I can tell you. I can predict the future. So look, that's where you sell. Okay? And then where would you buy? Well, I'd buy either here or here. We did this on Monday when we were way up here. Well, look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times you could have bought there. Yeah, but wait, they're 4-hour charts. They're too fast. These are all micro moves, but each move is 100 pips, right? This is 100 pips, drop. Another 200 pips, drop, right? 100 pips up again, 200 pips down. So, tradable. That's the message, tradable. If you're chasing, you lost money, and it's nobody's fault but yours. Okay. Oil, having its problems, huh? Rejected at 51. Try to get this out of the way. Come on, Bubba. There we go. Cool, man. Cool Mo D. Okay. Remember, I'm more bullish than bearish. This is only a discussion, similar to the one we just completed. If you were a bear, you sell here. We talked about this on Monday. Okay? Remember, the charts don't tell you to sell. That's what amateurs do. They look at the charts and they want the charts to speak. Brooke asked about divergence. How do you incorporate that? Divergence tells me profit taking. So does this tell you, do you see this as divergence? Falling stochastic sideways price. That indicates that we're losing bulls, and bulls, right? And this is my original plan anyways. In fact, the better plan is even further down, like that. Okay? So divergence is profit taking. So for example, like this is down, this is sideways. It doesn't tell me people are selling, it tells me bulls are getting out. Doesn't mean they're selling. So this could drop. Doesn't mean people are selling. If I'm a bull, I simply identify the next two levels in which I'll consider to buy, because those bulls may come back in the market. Where might they come back? How about 50 bucks, even Steven? Maybe that's just pure psychological. But I have 49.60, and the next one is 48.91. But I already told you this on Monday. It's Thursday. Plan still in effect. Right? But if you sold, this is the obvious place to sell, and there's your obvious target. Once again, I don't know the direction. I have assumptions, I have a bias, and all that kind of stuff. But if a bear did what a bear was supposed to do, it reasonably worked out, or at least they were not wrong. So it's cool, right? It comes down to the plan. You don't know the direction. You're going to have to make a hypothesis and use scientific methodology to confirm or deny it. And the rest is simply knowing where to sell, knowing where to buy. You should know your prices. You should be able to say, I'm bullish on the oil market, and these are the two prices I'm going to buy next. That sounds intelligent, doesn't it? So some people do something similar but different. They say, I'm going to buy the next 5A cross up. Sounds all right. They'll be very mechanical too. They'll say, well, I'll wait for the 21.55 to cross first, then the 5A, which is fine. It's very mechanical for new traders. And it works most of the time, but not all of the time. What part are they missing? Bias and support. Thank you. Both of those are correct answers. Support and resistance supersedes moving averages, and bias supersedes support and resistance. Bias meaning fundamental point of view for a market. Okay. So, like, I know what I'm doing in January, but because it's too far out, I can't tell you the prices in which I'm going to do it, but I will in January. So I have an opinion, I have a bias based on fundamentals. When we get there, I'll use technical analysis to pick out the prices, and then I'll use also technical analysis, not strategically, but tactically, to confirm the strategy, aka sell at resistance. And the rest is just, profit or loss. Okay, yen. We'll do some yen. Amazing coincidence here. Just random coincidence. Just go back to here. Let's see what we were looking at. Yeah, this goes back last week, doesn't it? Or maybe it was this week. No, last week. So this is the pivot profit zone, okay? We're still in the pivot profit zone. So to look at, one thing to observe and put into your memory banks is how pivots work together. And you'll see, like, some people don't use the monthly. So they're trying to squeeze one more trade in to get the weekly. and it comes back. And you'll see this often, and it's not anarchy like I just drew. I'm like, wait, that looks like anarchy. But it's a very common move. But how important is it? All right, well, you have the projected high for the month. Some but not all traders see it. You have the projected high for the week. Some but not all traders see it. Did the Fed change anything yet? No. They helped the market get north. But it stopped, right? Like, to me, there was a change. Portfolios did adjust. But boy, technical analysis, in particular technical analysis using pivot points, seems incredibly important, right? Even a change in policy at the Federal Reserve Bank of the world only gets us to a pivot cluster of resistance, and then it stops. And there are still people not using pivot points. You're like, really? Wow. Really? Really? Wow, right? See, this is, again, the monthly target. The month of September should be no higher than 112.54. Well, golly, it went to 112.64 and reversed. Yeah, okay, so it went 10 pips above for a few minutes. That's still pretty reasonable accuracy when we're talking about 4 or 5 weeks of price action. How do we take delivery of the charts? If we, please ask again. I'm not following you. How do we take delivery of the charts? Oh, did you sign up and you don't have access, you mean? How do you, well, the pivot point indicator is in 2 or 3 different places in the course to make sure you have access to it. It's in one of the lessons, it's in a download section, and it's in one other place, which I don't remember. So you just simply install the indicator to your MT4 account. I think that's what you're asking, right? Yeah, no. Like, I think it's in the very, not the first lesson, not in lesson 1 that gives you the intro. I think it's lesson 2. And there's a big thing under the video. It says download pivot plotter here or something. And then I think there's also at the top of the course, there's like a downloads or an apps or something sort of tab. And I think in the overview there might be a big link, but yeah. If you can't find it, send me an email, wayne@fxbootcamp.com. Yeah, I will give you the promo code for the swing trading course. This is how you do it. You contact TradersWay by email, phone, or chat and say, hey, can I have the coupon code? Rough, I think MT5 works just the same, to be honest with you. I don't know. I think so. I'm quite certain it'll just work perfectly fine. Oh, right on, Freddie boy. Cool. Thank you. Oh, Brendan says I have a tab with downloads. Thank you. See, I knew it was there. And someone else said that the coupon code is expiring. Yeah, I told you that. I sent you the email on Monday. FX Bootcamp is not accepting my payment. Discover card through PayPal, but they say FX Bootcamp is canceling it. Email me, Wayne@fxbootcamp.com, Brady. He has to call the bank, that kind of stuff. Oh, man. His Visa is blocking it. All right. Is there a support room? I'm here every day, Johnny boy. So, yeah. All right, so let's move on.com. Just want to point out, like, you should know this is resistance. And everyone else that doesn't has either missed an opportunity or lost some money. Now, it might be an opportunity cost if you bought down here. I mean, like, look, some people bought here. They were just, like, spot on, gambling on the Fed stuff. Great. And they're still in the trade, hoping it goes higher. Oh, I mean, this is the sport. Yeah, right. You're right, John. Yeah. Yeah. So anyways, we know that it shouldn't go higher than this. That's more than reasonable. Projected, sure, it's a conservative, but still, what are you trying to, but against the aggressive month, it's a pretty good start. It doesn't mean it can't go up further, but what it means is you should have booked your profit and gone to the museum, right? What did you do today? Oh, I made a bunch of money, and now I'm just hanging out at the museum. I think I'll donate some money to the museum. Put my name on it. Wouldn't that be great? You're that rich. You're like, hey man, I'm going to take over this endowment. I'm going to drop a bunch of money on this museum. By the way, we're going to have a 1-year exhibit, and we're going to blow up some Forex charts to like 22 feet by 44 feet. And we're just going to hold, the whole museum is just going to be charts. Someone's like, is that a butterfly, Gartley? Damn straight that. I call this Renko. Yeah. Right? Ikimoku, Fukumuku. Yeah. People just look at it like, this is beautiful. Yeah. Yeah. No, it's true, right? People would look at it like, wow, how much you charge for that? And you're like, well, that one's actually worth billions. If you sold it, yeah, the old pregnant nun joke. All right. All right. Again, targets. Okay. Now, was it just the other day where we said if you were still bullish, you would look for a pullback? Now, I have to admit, this is a scary one. Okay? But you got to decide what you want to do. Yeah, that's what I'm trying to say, Robert. It made me billions. But you can have it for only 900 million. You know, we laugh, right? Like, Picasso would take out a cocktail napkin and a 20-cent marker and go, he'd draw something like this. Right? And he's like, it's a man riding a horse. That's 40,000 bucks. Why is it 40,000 bucks? because it's a Picasso. Okay, so anyways, if you're thinking, where's the support, where's the resistance? See, the interesting thing with this is even though it's dropped like a ton of bricks, it has not made a lower low. Do you know what I'm talking about? And I believe our target is 92. Our target's 92. We're only at 89. So are you going to buy this at 89? Of course, Robert, but that's your job, right? That's your job, but that's what you are supposed to be doing. Do you think it'll play off the weekly M3? Yeah, I notice I don't have monthlies on this one, huh? So this chart, this daily chart, says it's going to go up, but it's going to take 2 more days. It could be 2 more days down, 2 more days sideways, which actually tells me it's going to go up tomorrow, and then Monday, this 21 will be up here, tickling the bottom. Be careful with the Stokes analysis. Warren says it looks too high. Be careful with that. Too high means everybody's buying it. What's more interesting is when it's falling at resistance. Not that it's too high. Look, if it's 92% overbought, it's because people are only buying. So if anything, at that point, it's still confirmation. Then if price slams into resistance and then the oscillator drops, then that's more interesting. Okay, but I'm only bringing this up, right? Because I know you've been around a while, Warren, and you know what you're doing. But a lot of people, what they say is it can't go higher because it's so overbought. Well, if it's overbought, and it means only people are buying, so it can keep going up. It can stay overbought literally forever unless people start getting out. And that's what it's trying to tell you. Hey, 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 people are getting out. So it's not saying, hey, 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 it's overbought. No, it's not saying that. It's when it's dropping, they're like, hey, 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 hey. People stop buying. And that's the relevant information. Well, look, I bet you guys, if you turned your TV on to Bloomberg, CNBC, or whatever, I don't know if Al Jazeera has a finance show or not, but they're probably all telling you the stock market's overbought. It can't go up any further. The Fed's raising interest rates. It can't go up any further. I mean, I'm certain. I actually don't watch these TVs. And when I have it on my computer, I don't even have sound. There's literally no sound drivers on my computer. So, or on that machine. So I don't even listen to what they're saying. But how many people would confirm? Like, you tell me, honestly, I don't know. Do you hear that the Fed's raising interest rates so the stock market's going to fall? Do you hear that? Yes or no? Like every other day. It's just simply not true. It's just wrong. I've said that forever. Absolutely forever. It has nothing to do with interest rates going up. Do you know when the stock market's going to fall? I can tell you exactly when. I told my friend, oh, I think about 6 years ago when the stock market started going up. I'm like, put all your money in. And he's like, but just do it. And then his financial advisor and stuff can't tell him, and I'm like, dude, I'll tell you exactly when. He's like, what? I'm like, I will tell you within 6 months to a year when the stock market will fall. Don't worry about it. Just stay in. This was like 5-6 years ago, right? And then I think it was 2 years ago in January, we had a 10% decline in the stock market. You guys remember that? So my buddy comes over, like he's just my buddy, and he's like, what do I do? Is it over? You told me you would tell me when it was over. I said, yeah. I said I would, and I will. I said, I have a line in the sand. I know exactly if the stock market goes any further, and we got close. I think we even hit my line. But I had a line in the sand, and I'm like, as long as we're above that, we're fine. Right? Just so don't worry about it. Stock market decline 10%. It's a buying opportunity. It's just simply institutional investors taking profit or booking profit, and then they'll buy it right back. Does anyone remember that? Like literally I explained it, that it was coming. I think we even talked about it in December. It was coming. They need to book their profit. They need to show their investors that they had a winning year, like literally cash, not like, because they're not mark to market, right? They have to cash out to claim it. So they're going to cash out. Stock market's going to have a reasonable pullback. I don't know what that means, right? And then they're going to buy it all back because they don't want to be in cash, because then their clients will just ask for the cash back. Right? So anyways, my buddy comes over. He's like, oh my God, stock market's not 10%. I'm in heavy. You told me you would tell me when it was all over. I said, yeah, it's all over. Don't worry about it. Sure enough, 2 weeks later, higher high in the stock market. Higher high. Now we're at what, 22,000? That was back at like, what was it, 18,000? Might have been even lower. Amazing. So, interest rates going up is a good thing. Do you know why? Oh, it was back at 1650. How about that though, James? Sit down with like a family member or a close friend and say, it's 1650. It just dropped 10%. We're good. Stay with it. Don't worry about it. I got a big brain. I know these things. Trust me. Well, that's what you say to clients every day. Yeah, he's not a client. I'm not trading his money, but he's a friend. I'm like, whoa, I'm watching everything. I know. It'll be fine. It's disconcerting, but it's fine. Nobody likes the volatility. It'll be fine. Institutional investors will buy it back because what else are they going to do? See, back then, you didn't want to invest into Europe because 1650 was cheap for the United States. And Europe was still pretty crappy. We were worried about China. Remember all that? I mean, there was some crappiness globally. So you're like, well, where else are you going to put your money? Right? Yeah, oil was at 30 bucks or something. Like, where else are you going to put your money? You're going to cash. Okay, you're going to dump this U.S. stock market. And then what? Right? No, so you leave it to the U.S. stock market. Great. Now we fast forward to now. Now at 22,000, it's expensive. There's got to be some other better opportunities, right? So that's why suddenly the euro's been strong and stuff. But okay, going back to this idea of interest rates going up bad for the stock market, it's just wrong. That's I don't know. It's just wrong. All right. So the stock market will go up. Interest rates will continue to go up. See, the stock market, the interest rates are going up because the economy is healthy. Just ponder that for a second. So should the stock market crash because the economy is healthy? And how do you know when the global economy is healthy? How do you know the rest of the world's doing well? What's the one thing that can tell you? Freddie boy, from time to time you'll have retracements, but there's not a collapse imminent. Oil, no. I'm not going to, no, because that's going to be supply and demand of an actual physical commodity. So if there's too much oil, it's going to be cheap regardless of demand until the equilibrium shifts. And don't get me into the elasticity idea, but we can get right into this. Import, export, copper. It's easier than all this, guys. Easier. It's easier than this. GDP, easier. And we need global. The answer I'm looking for is the US dollar. When things are good, the dollar is weak. Okay? Yeah, no inflation, North Korea, blah, blah, blah. All right. Does that mean rich people don't want to make money, James? Institutional investors, hedge funds, pension funds, they all just say, oh, North Korea, forget it. We don't want to invest anymore. Yeah, no. But that's too much TV talk. Rich people have their money deployed. Poor people don't have any money, but that's why they're poor. Rich people with cash are just as poor people with no cash. Right? Wealth is money working for you. Right? So if you had $100 million in cash and it only returned 1% per year because you're locked up in a bunch of treasuries and bonds, you only make $1 million a year doing nothing. Do you understand? Like, so North Korea and the guy doing nothing, making $1 million a year, what's he going to say? Oh, I don't want to make $1 million a year because I'm freaked out about North Korea. He doesn't give a crap about North Korea. Rich people don't even watch TV. Dude, I had a kid come over to my house and he's like, where are your TVs? Right? He's hanging out with my kids. And he's like, he's going room to room. He's like, he's almost cursing. He's like, damn, where's your TVs? What am I going to do here? And I said, oh, watch your step on the chair, on the stairs. Oh, hey, kid, are you all right? Gee whiz. That's why you shouldn't wear socks around the house, man. I don't know how you do it at home. Yeah, you got to be careful. I don't know how you guys run your household, but when you're here, it's good to like be careful where you step and keep your mouth shut. You know what I'm telling you what? So anyways, yeah, so rich people don't have TV. They already have the answer. They pay people to give them answers. They don't watch TV, right? So anyways, here's what it happens. The dollar is weak when the world is working properly. It's part of how the world works. The dollar's weak now. Good. I told you that a year ago. That's a good sign. We don't know when it's happening, but that's a good thing. The dollar's strong when the world sucks. But, you know, 5 years from now, there'll be people on TV saying, oh my gosh, it's the end of the world. Look at the dollar. It's so weak. The dollar's worthless. Everyone's going to move to China. China's going to take over the world. Everyone's for NIMBY. Even though they don't have a legal system you can trust, even though they don't have a liquid bond market, even though, like, wait, actually, those things are important. So, whatever, the dollar's weak when the world is good because it's in demand because of business transactions priced in the reserve currency. Duh. Okay? Therefore, when things are good, the U.S. is going to do gooder. Okay? And interest rates will go up, but things are good. They're going up because the economy is healthy. We're not at 5% going to 8%. We're at like 0 going to 2, right? It's still extraordinary low. We're raising it because we do not need extraordinary support because the economy might die tomorrow. Things are good. Fed raises interest rates. They're thinning their bond portfolio, their balance sheet, because things are good. We don't need extraordinary measures. This should make the stock market go up. It says, hey, world, be confident in the United States of America. Right? You get it? Like, this is good. When does it kill the stock market? When interest rates are higher than growth or inflation? Okay? And the example I give, and I've done this speech 100 times, the one I usually give is the shoe company, the shoe salesman. He has a store, and he sells shoes. She and he. It's a mom and pop shop. They sell shoes. They need a couple of $1 million in inventory. Plus, they got to have their store. They got some employees. They got some insurance costs. Great. So their profit margin is about 5% because they got to borrow $3 million to cover expenses and do some advertising and all that kind of stuff, right? Great. But it's just for mostly inventory. Cool. That's what a bank does, by the way. Oh, you have a business? You have a legitimate business? And you make money and you're profitable and you need to borrow some money from us simply to buy shoes so you can sell the shoes? Yeah, we'll charge you some money. We'll charge you for that. It's a service we can provide you because we take deposits and then we'll lend it out to local businesses. Great. We'll lend you $3 million a year. It's going to cost you 2%. So, now what? It's reasonable. The shoe salesman said, the shoe store owner borrows some money, 2%, buys a bunch of shoes from manufacturers, puts it in the store, does some advertising, people come in, they buy shoes as employees, wrap it up in a little bag, and off they go. It's called a business. I'm not a businessman. I'm a businessman. Let me do my business. Damn. So, anyways, they sell some shoes, and guess what? They pay back their loan. Everything's good. Uh-oh. Inflation's kicking in. Uh-oh. Fed's raising interest rates to combat inflation. This year, the loan is 3%. What happens to the shoe store guy? Well, inflation's good. People are coming in. More retail sales. More people in the economy are richer. And they come in, they're buying 3 pairs of shoes, or they're buying leather shoes and not pleather shoes, or they're buying more or better. Because as you know, as real incomes rise, demand for superior goods goes up and demand for inferior goods goes down. You know that from Microeconomics 101. Okay, great. But this spurs more turnover. The hot money kind of stuff is going on. More inflation. Fed's got to raise interest rates to 4%. This is starting to eat into the shoe salesman's profits now. There's not a lot of real good reason to be in business, except it's the thing that you do. And you're making enough money to pay yourself. You're making enough money to pay your employees. And things are so good, though, the sales are so good that you might have to expand. you might need a bigger store. Now, it's not incredibly profitable, but money is just rolling in. It's called inflation. That's what happens when the economy is overheating. And you're like, damn, people are coming in, they're buying all this stuff, and it's really good. I'm not making a ton of money, but I have a lot of cash, right? Cash flow is good, profitability is down, but you know what? If I could just sell more shoes, I can make it up that way. So I'll knock down a wall, I'll take over the space next to me, I'll have twice as many shoes, and this is very typical, guys. So you make it up that way, increase volume, try to drive down your input costs, therefore get a better deal from the manufacturers, and drive that cost down, but your cost of money is now 4%. It was 3%, and before then it was 2%, right? Well, this is more expansion, and the real estate guy is making money, and the agents are making money, and the manufacturers are reporting new sales, and people are buying the stock market, and housing prices are going up because everybody's got jobs, and holy crap, now it's even worse. But notice, interest rates are going up, but the stock market's probably still going up because of all these other things. I mean, you had to hire a contractor, knock down the wall, and build the new displays, and the new space. I mean, that guy's making money, and he's got 5 crews, and he's got to go to all these different work sites. He's pulling out his hair. He can't even get workers anymore. So now he's got to pay them, and insurance costs are going up, and your guys are not as good as the old guys. And I mean, just every little minute piece of the economy is getting red hot. Fed can look at this. Eventually we get to 5%. Guess what? The cost of money has now taken out all the profit from the shoe company. Sales are high. You get it? Sales are high. Business is coming in. He's expanding. He's like, I'm having a bad month, but I just expanded, and it'll pick up. It's always picked up because they only think about 5 years back, right? It always comes back, and things are booming. Sales are still up 12% over the year, over 2 years ago. It's just a bad month. It's just a blip. Well, if it's a publicly traded company, guess what? They say, hey, you know what? Same store sales are up, right? Receipts are up. Demand is high for shoes. But we're not profitable. We're not losing money, but we're actually not profitable. But, you know, we took off a one-time charge because we expanded. We doubled the number of stores. And it's that. But we're not actually making money. You see now where I'm getting? That gets reported. What happens after 2 quarters in a row for a company that's not profitable? Yeah, Pete, maybe, probably. Bear in mind, they don't want to look like they follow the Fed, so they'll skip a meeting and do it next meeting. So, guys, what happens to a stock that reports 2 quarters in a row of no profitability? That, my friend, that is when the market crashes, because it makes sense. The cost of money is higher than the profit margins of those that are using the money. But look, businesses use money all the time. I don't care if you're GE with $100 billion contract, you still borrow money to pay for the lights. It's normal. It's just absolutely essential, in fact, to have this liquidity. So when they're on TV and they're like, the Fed's raised interest rates all the way to 1%. It's over. It's all going to crash. You should say, what an idiot. What an idiot. Can't believe that guy's on TV. Then you do like mute. I mean, you guys probably did that to me. I go on these diatribes, but like this is a fundamental thing you should know. Like you need to know this stuff to take care of yourself and your family and your friends, like I do. Like, look, dude, don't worry about it. We're fine. Stock market's at 1650 and you're freaking out? Why are you freaking out? I was at the gym working out and they had CNBC on and the guy said it was over. Really? Money is like free to borrow and the stock market's going to crash? Really? That's what he thinks? Money's free. If you're Ford, if you're Tesla, I don't know, if you're a profitable business, you can go into a bank. The bank's like, I don't know, we might have to charge you 0.75%. And you're like, 0.75%? How much will you give me? Right? Right? You get it, right? Like, how much cash will you give me? Don't you remember when Apple borrowed like $1 trillion? You guys remember that? They had $1 trillion in cash. They issued a bond for like $1 trillion, right? The most profitable company in the world issues a bond for $1 trillion. They already have $1 trillion. Why would they do that? Because the money was free. And now you think that the stock market's going to crash? Dude, they could be in business for 1,000 years and not make any money, right? But anyways, you have to think about it logically and intelligently. You can't listen to these other people. The stock market will crash when the companies that you're investing into no longer can make money. And I mean systemically. I mean like the beta. Look, if there's a shoe company that sucks because they make bad decisions, they make poor decisions, the management sucks, the inventory sucks, the supply chain sucks, then we need to kill it. And that's what capitalism does. Say, look, world, we have 5 shoe companies in our world. You're the worst one. Get the hell out. That's what happens. Adios, bro. And we look for another one to come in and do something 10 times better. In fact, knock number 1 off. That's how capitalism works, right? But I'm talking about the economy now. Right? The economy, when interest rates are more expensive than profitability and stuff. But remember, they're relative. So think about the dot-com days when the stock market went up and 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 up. And there were people that said, look at the earnings to price ratio. It's so expensive. Now, some of it was stupid. It was hype. You're buying a company that didn't even make money. But there are a lot of like really good companies that really made money. And they're like, you can't buy that. It's too expensive. You're like, well, dude, they borrow money at 5% and their profit margins are at 10%. They're golden, bro. Right? So anyways, it's just business common sense. Don't make it more complicated than it is. The stock market will go up until interest rates are too high, eats into profit margins, and then remember the stock market takes 6 months to a year, figure it out, and suddenly investors will start cashing out. But by then, I've already taken all my profit, and I will be sitting on a massive bond portfolio. Yeah, I actually have this planned out. My only question is it 8 years from now or 12 years from now? Let's double check the time. I know I've babbled on. Yeah, I've babbled on way too much, guys. So I apologize. I apologize. Namaste. Be kind on me. We didn't do a lot of great analysis today. Hopefully it was a great talk. I don't know. Yeah. No, I feel like we had fun. I enjoyed myself, but then I think a lot of you might have said, you know what, that totally sucked. You know, we all, bad day, I guess. Not enough sleep. No, it's not that I don't like crypto. Like, it doesn't make sense to me, but I live in a country that, you know, I live in a very wealthy country. Let's face it, the United States is rich. Like, no, it doesn't come up in my conversations. It really doesn't. I don't know anything about cryptocurrency. Why would I use it? I trust my bank. I'm not hiding anything. I have money. I mean, I have access to credit and stuff. I don't know if you can borrow Bitcoins. Maybe you do. I mean, maybe it's a huge opportunity I'm missing out on, but it just, you know, I hear most of it from people that are in countries that can't trust their government, that can't trust their banking system. And that part I get. But it's just, I don't know anything about it, guys. I've never seen a Bitcoin. You know, like when people, like mining Bitcoins and stuff, I don't get that. I don't get it. I don't understand it. No, I am not a big fish. I'm a peon. I'm nobody. Okay? No. I don't mean to talk myself up. No. So, but honestly, I don't know anything. But right, in regards to cryptocurrencies, another thing like gold, yeah. Well, then yeah, I mean, if you have to have it, right? Yeah, a lot of criminals like cryptocurrencies. So, yeah, but see, I'm not a criminal, so I just don't know these. I don't know these things. It's just like I don't know. Never looked into it. Never researched it. Right? If you want a currency based on hype, buy the U.S. dollar. But at least the United States can raise taxes and make money. And if that doesn't work, they can just print money. I don't get cryptocurrency. It doesn't make sense to me. Okay? What's a Bitcoin based on? So if you buy Swiss franc, 40% of Swiss franc is based on silver. The United States is the largest economy in the world. It's based basically on taxation, right? And the fact that everybody needs it. There's a true supply and demand and stuff. And so there is the full faith of the U.S. government. But we can tax, we can print, or we can just bomb the hell out of some small country and take all their crap. So there's some upside to that, right? Our army's bigger than your army. So, cool. But the rest, I just don't know, right? So anyway, so I apologize. It's not that I don't like it. It just doesn't exist to me. It just, never even seen it. Like literally. I have a friend that probably has some Bitcoins, probably bought a pizza with it or something, but don't really know. So anyways, I've babbled way too much. My coffee mug runneth dry, and that's a big mug, so I don't know. I'm sorry I went too long. I'll see you tomorrow. And just keep me focused, because you see, like, you guys are the leaders of this, so you throw me in a direction and I go there, and sometimes I pick up the ball and run like Forrest Gump. Sometimes it's the wrong way, sometimes it's the right way, I don't know. But just we can focus on tomorrow more on the technical analysis if you want. But at least now you know when the stock market goes up and the stock market goes down. Remember, I put people into the stock market. If you want I gave a 45-minute to an hour presentation one day outlining the stock market. I think was at like 9,500, and we drew it all out, and I had a plan. We did a Fibonacci retracement, everything, and we planned it out that the place to buy the stock market was at 8,000. And then I went on vacation with my wife and kids to Canada to visit my mother. And while I was there, the stock market came down and hit 8,000. While I'm there, I'd rented a car. I'm packing my elderly mother into the car. I got 2 babies. I don't know, they were like 2s and 3-year-olds. I can't remember, but they were young and they're freaking out and crying. We're going for a 6-hour drive. My wife's stressed out. We're getting get in the car. We're going. I'm on the phone with Merrill Lynch. I got to buy the S&P 500. Seriously, true story. Come on, Wayne. We're going. We're waiting. We got to get there. It's 6 hours to Edmonton, eh? I'm on the phone with Merrill Lynch. Please buy the S&P 500. Oh, well, we're going to need 9 signatures, and this could take 4 weeks. I'm like, dude, I need it like the next 20 minutes. I need you to buy the S&P 500 with my entire net worth. So here we are at 22,000, and I think we're good, man. Keep going. So, see you tomorrow. Thank you for being on my team.